On the trading screens today, millions of eyes are fixed on a single question. Is this the start of a decline, or just calm after the storm? Ethereum is trading around $4,378 after swinging between 4,365 and 4,493 in today's session. Volatility remains high, and signals are mixed. Not long ago, crypto markets surged on the back of central bank expectations after Jackson Hole. Then came a sudden correction, wiping out weekend gains. Bitcoin and Ethereum both fell in what some traders called a flash crash. The message is clear. The story isn't over. Only another page has turned. So what is the fundamental story on Ethereum right now? Back in May 2025, the Pectra upgrade went live, building on the earlier Denkin update. These upgrades improved scalability, reduced fees, and expanded capacity. That technical shift has fueled more activity in decentralized finance, stablecoin transfers, and layer-2 ecosystems. Recent weeks have shown a noticeable increase in on-chain activity, suggesting the trend is supported not just by price but by real usage. On the institutional side, the bridge keeps widening. In the United States, regulators have approved in-kind redemptions for crypto ETFs, making funds more efficient and helping sustain flows. These structural improvements create stickier demand for Ethereum. Meanwhile, major banks have raised their year-end price targets for Ether, showing that the narrative is supported not only by speculation, but also by institutional voices. Still, forecasts are road signs, not destiny. Here lies the conflict investors are wrestling with. On one side, structural demand, stronger network fundamentals, and deeper ETF access. On the other, short-term macro risks, sudden liquidity squeezes, and the fear that overcrowded positions could trigger sharp sell-offs. The most recent correction doesn't mean Ethereum's story is weakening. It shows that investors are recalibrating timing and expectations. So what does this mean for investors? Align with the data. Even if the price pulls back, growing on-chain activity and cheaper transactions signal a healthier foundation. This isn't just about price charts. It's about product, market fit getting stronger. Watch policy and fund flows. Every change to ETF mechanics can boost institutional participation. But remember, these channels remain sensitive to Federal Reserve policy. A single hawkish speech can shift risk appetite overnight. Manage expectations. Bold price targets provide vision, not certainty. Short-term shocks are part of the journey. They're chapters within the larger book. The picture today looks like this. Price is testing the $4,300 range, while usage and infrastructure are quietly writing the medium-term story. Volatility is not a flaw of this market. It is its nature. Over time, Ethereum's trajectory depends on cheaper, faster transactions, deeper institutional pools, and an expanding developer ecosystem. So, how do we close this chapter? If markets swing between fear and curiosity, Ethereum feeds both. Fear is fueled by macro surprises and sudden sell-offs. Curiosity is fueled by real adoption and the evolution of the network itself. If adoption inflows in the next chapter, the price will follow. In the end, the real story isn't just in the candles, it's in the blocks themselves.